So, for example, one of the most common things that you'll see partway through an inquiry is that HMRC have identified your client is declaring minimal or no income, but is buying properties or sending kids to a private school, or some other lifestyle indicator that is obvious that things don't match. That is enough to form suspicion and ask questions, and can be the reason for it. Marketed schemes are an easy win for HMRC. You've got to declare it on your return. I would say that those cases in general, and since COVID, since Brexit in some cases, have been moving incredibly slowly. HMRC often just do the statutory minimum, and eventually something will go through tribunal, and then they'll seek to sort of reach a resolution across the board. The most recent surge I've seen on this space is in relation to Property 118, property and corporations. Also, as I mentioned earlier, in terms of a common trigger, the other information that each HMRC holds or receives, whether that's land registry or estate agents or Airbnb, PayPal, eBay, Amazon, Just Eat. HMRC has started cross-checking these things with returns routinely, and it does keep coming back to bite clients when they've got slight discrepancies or intentional under declarations.
So I'll add a few things here. Thank you, and apologies for a little bit of a mishap in the recording. One of the most important and perhaps things that are not taken into consideration is HMRC has got this powerful system called Connect, where it's essentially it does what the name says. It pulls data from all the different various platforms, etc. Land registry, banks, Uber Eats, Just Eat, many platforms, eBay, Amazon, and it does it automatically, right? So it raises flags, and then someone is then assigned to look into it. And with AI becoming so useful and handy for us, it's also the same for HMRC, and they do use it to a very good standard. And it's not just within the UK. I mean, we've done cases where and we always, when people come to us, we always say, look, please tell us, at least unless you tell us, we can't defend you. But HMRC will often produce records, say, okay, can you ask your client, we've got this information, I don't know, from Dubai, or we've got this information from the Italian authorities. Can you speak to your client? Can you ask him? What does he have to say about this? It's not to say that it's always right, because we've had an example where HMRC have been trying to drag something out because our client's name, as a coincidence, matches with someone in a country where he's not been, right? And saying, well, what about this property that you own? And he's saying, I wish I owned that property, but I've never even been to this country. How have you linked me to that? So
yeah,
their net is expanding wider and wider, right?
Yeah.
So it's very a lot of the inquiries that come to us from, say, our contacts or networks within the mortgage brokerage sector is when people are trying to remortgage, refinance, etc., and then they find out that, okay, I need to get things fixed, because HMRC, it will raise a trigger if you are applying for finance and you're putting even finance applications, right?
Yeah.
We've had cases where HMRC were able to put forward a mortgage application submitted 15 years ago. Say, well, you said your income was this when you wanted to get the mortgage. Say, I think it was 100,000 on there, and now that year your tax return was saying that you earned 12,000. And one thing, I'll make a very clear disclaimer: these clients come to us once they have been in trouble, right?
Yeah.
We haven't been representing them before that. But yeah, Mike, I thought uh,
No,
these were
absolutely.
some important points to add.
Yeah, I mean, I worked with Connect when I was at HMRC, and that was Connect version 1. At that point, it would draw links between date of birth, address, email address, phone numbers on things like applications and accounts across these various things. Now they're on Connect 2. I haven't actually used it myself, so I don't know quite how intelligent it is, but it's only moving forwards from where it was. And I would say that in general, where we're getting these nudge letters where HMRC is sourcing this information, it is routinely more accurate than it used to be. So historically, it might be the case that someone had the same first and last name on an account in India, and HMRC would write to everyone who had that first and last name and said, "Tell us about your account in India." Now there is more rigor, so it tends to be first, last name, middle name, date of birth, and they can be pretty sure that it's right. It isn't always, but it's a lot better than it was.
And the other one that we are seeing a lot, sorry, Mike, I keep going
That's right.
on, is because we get so many inquiries, and I feel like it's important to share all the different sort of triggers that we see every day.
Yeah.
You might come across clients of yours that have some are trading on different platforms, right?
Mm.
We had one where this guy, he thought that because he's not trading on trading platforms that are based in the UK. So he had an account in Italy, he had one in Spain, he had one in Australia. He thought just because he lives in the UK, he's never been there, like he's permanently resident in the UK. He had all these accounts. And HMRC, the letter from HMRC and further investigations, they were able to bring forward all of that cross-border almost information. So,
Yeah.
well, we've got it. It was wrong. I mean, it was wrong, but it is a clear trigger.
Yeah. Yeah, the common reporting standard is very wide in terms of the information that it brings to the UK. You'll often, as Imad says, find that there are discrepancies where HMRC understands an amount of money to be interest, where it's actually the capital itself, and that's just due to translation issues and other things like that. But as I say, it is improving. So overall, when dealing with two aspects, either HMRC writing to your client, or if your client gets in touch and says, "I think this might be wrong," the approach is similar. So don't delay, because typically you'll have 30 days to respond to HMRC. And to be clear, if whilst you can seek extensions, that will result in higher penalties in the long run. So you shouldn't do it routinely. But also, if it's your client approaching you, you don't want to delay, because they're in a better penalty position if they bring forward the issue rather than HMRC writing to them. So you need to identify what's wrong, why, or what does HMRC think is wrong. We also we
The clear message, sorry, Mike,
sorry.
one of the main things I always say, you always want to, for example, is it not just tax for anything? You want to go to a specialist, someone who knows what they're doing, right? It could be someone else. No, it doesn't have to be us just because we're doing the webinar. But the earlier you get a professional, or sometimes you might even be dealing with the inquiry yourself, the sooner your clients involve you or someone like us, the better it is, because as the inquiry progresses and it becomes more, usually we've seen that it becomes more and more complicated, and then things become, we are seeing a simple compliance check which wasn't handled properly, and then it turned into a COP9 which lasted 7 years.
Yeah.
It would have lasted longer. We came in the sixth year and took 1 year to resolve it. But hopefully that gives the message.
Yeah. So yeah, speak to a specialist. The other thing in terms of speaking to a specialist, there's a number of indicators in HMRC's letters, how they approach things. And personally, I'll always give the caseworker a call quite early. I mean, one, it shows engagement, but two, you can often gain extra insight as to where they're coming from. When you have those conversations, when you've got the experience in inquiries, or, from my perspective, you've got the experience of working within HMRC, and you can ask some questions which maybe you can get a slightly different answer on, which can really assist in steering you early. If relevant, discuss the best way to take the information to HMRC. Do we answer all of HMRC's questions as they are? Do we revise and actually only answer part of them, and why? Or do we want to say, actually, let's give them everything now. Let's do a full disclosure beyond what they've asked, cover everything early, and address it in that way. Different scenarios have different benefits, so it's worth bearing those things in mind. And then lastly, as some of you might know, HMRC can't discuss or reach a view on penalties until the tax is concluded. So it's the last thing they do. But what you might not be aware of is that they're thinking about that day one. So anything you say to them, anything you send to them, anything your client says will be factored into their penalty decision. So you need to have those thoughts about penalties quite early and start to factor that into what you're saying to HMRC and how you present it to them. That's not to say that you're lying or anything like that. It's just that certain terminology, even I had a client who spoke with HMRC during an early meeting. So HMRC were asking him about his rental income, and he said, well, yeah, obviously I've looked into it now, and I understand that I should have declared all of this. And HMRC have taken that to mean that he knew he needed to declare it, and therefore it's deliberate behavior. Whereas what he meant was, having had the letter from HMRC, he had researched it and then now was aware. That slight slip of the tongue was recorded in meeting notes, and then has been carried through to the point where HMRC are pushing that deliberate behavior. That means far higher tax, far higher penalties, a much more significant exposure, just because he didn't have advice at an early stage and dealt with HMRC himself. So we thought it would be useful to give you a brief example. Obviously, we've given a few as we've gone on, and I'm sure others will come out just by the nature of what we do. But Code of Practice 9, as we said, is the most serious HMRC inquiry short of criminal prosecution. So we have got an example of one that we've resolved. Our client approached us early, right at the outset, very positive from our perspective. HMRC sent them a contractual disclosure facility invitation saying, we believe you've committed deliberate tax fraud, effectively own up to it and get a better resolution. We were aware at that stage that it was related to property and declared income, but our client didn't actually feel there was much wrong. We were able to establish that their affairs had been set up, as is typical for a family of their culture, with all holdings put in the eldest son's name. Actually, our client's father was responsible for everything up until his death. He benefited in full, he controlled it, but it wasn't in his name. As you might know, in cases like this, HMRC tends to primarily consider legal ownership and is generally less willing to consider beneficial ownership when it's within family structures. In this case, we were able to work with our client to collate overwhelming evidence of what had actually gone on, and painted a consistent picture throughout engagement with HMRC to ultimately persuade them to limit the tax on our client, the son, to solely the period since he inherited. I mean, he didn't inherit, it was always in his name, but since he inherited the properties, this drastically reduced the overall liability. And due to the early open engagement and the quality of the documents that were provided, we were able to keep penalties to the minimum within the range. So this kind of exposure mitigation exclusively comes from early detailed consideration of the problem from all angles and considering whether there are any what I would refer to as out of the box solutions, because there isn't always something, but often the circumstances are unique and can be used to your advantage.
I mean, one question I think that someone might have is why did we enter the CDF if we didn't feel that, if the client didn't feel that there was any wrongdoing, right? Now, the answer to that is because if when you are landed with the CDF, whether there is wrongdoing or to get to the actual answer, not just rather what the client feels, right, takes the whole process of what we actually do in the COP9, right? So, and if you get it wrong at the beginning, say, I haven't done anything wrong, and later on you have done something wrong, then you have exposed yourself to the risk of prosecution, because by accepting CDF in COP9, you are protecting yourself from getting immunity from prosecution. And then, of course, I mean, we've had many other examples whereby it's not a straightforward, it's not an easy road, because then why did you enter into CDF? Because CDF means that you would get deliberate penalties, right? But then we have been able to successfully close other COP9s under CDF without deliberate penalties, simply because there's lack of any evidence of that.
Yeah.
Carry on, Mike.
Absolutely. In terms of best practice, this is effectively best practice to avoid inquiries, but also to minimize the consequences of them. It's not really rocket science. It's everything that you would normally do. Keep on top of your client, detailed records of everything that you see. Anything unusual, flag it with them, have a conversation, and seek a second opinion if relevant. We're always open to that conversation as to whether that's something that needs to be disclosed, whether it isn't a problem, or if HMRC write to you, you have that conversation early. Act fast, speak to a specialist.
And one thing that we always say, we strongly believe in providing an almost like a support network to our accountant friends, right? So my phone, even now, I'm getting messages. Even 5 minutes before the webinar, I was talking to someone who went to someone, tried to do incorporation when we clearly told them that you will not get the relief. Now they've got an inquiry. The point is, we'll share our contact details, but we are always here and open. It doesn't always need to be an engagement. We always believe in building long-term bridges and relationships.
So as we mentioned at the outset, we offer a wide range of services, not just Imad and I, but the firm as a whole. Beyond what we've talked about today, if you or your clients have concerns in any of the areas on screen, get in touch. And if it's not Imad or I, we're obviously happy to pass on details of someone that we think can help.
One thing that's not on here, which is getting more and more relevant and will become more relevant, I think, from after Thursday with the new budget, is becoming non-domicile, non-resident, because now we're getting about 3 to 4 inquiries about that every day. Not everyone's got, I mean, for most of for a few of them, the answer will be no. I'm sorry, if you're living in the UK, you can't just set up a company in UAE and then say that you are non-tax, you will not be subject to tax. But becoming non-resident or non-domicile, etc., moving your operations offshore is one area that has become quite big in terms of inquiries. It's sad, but that's one of the areas that we help with as well.
Mm. So obviously we've got key messages on the screen, and we do want to thank you for attending, but I also want to open up the floor in case anyone has any questions during that time. I'm going to leave our contact details up and then hopefully put this in the background so I can see anyone who wants to ask anything. Is that still showing, Imad?
Yeah, it's still showing.
Perfect.
Can I just ask a point, if you can hear me all right?
Yes, we can, Julian.
Julian Ansell. HMRC don't seem particularly proactive in terms of the companies that are being closed down at Companies House, which are trading for a very short period of time or hardly trading at all. You notice any increase in activity there, by HMRC to look into these companies?
I would say, in my experience, if there was an active inquiry or if there is any outstanding debts, then they do oppose the liquidation of companies. I appreciate that's not quite what you're asking. Phoenixing, which is I think what you're describing, has been a particular area of focus of some of the people within the fraud investigation service back to the time where I was at HMRC. It's a difficult problem to solve. I mean, from my experience and what I see, it's not uncommon that you would see a company appear, disappear, and then an altered version of it reappears where maybe the address is the same, but you've got a different director and things like that. So there are checks that go on where you see the same director appearing throughout. But what you're describing falls more in the fraud space rather than the wide scale inquiry space. What that means is far lower numbers, but far more complicated cases when they do come about.
They tend to go for the easy pickings, I suppose, don't they?
Well, so as I say, the nudge letters, you're talking thousands of letters and a very low effort approach from HMRC with not particularly trained staff. The inquiry staff are more trained and deal with a lower volume of inquiries, and it almost acts as a funnel where if they don't, if you're not routinely compliant, then you go to nudge, then you go to inquiry, and the most severe offenders are picked up by the fraud investigation service, which means that you're not going to see the numbers of them. But when those cases do come about, it's life altering for the individuals involved.
Yeah, and Julian, the other way of how HMRC become more involved in that is, in Phoenixing, this gets caught in COP9. So if someone who's been doing that falls under COP9, then it's like, okay, we're just going to open up everything, whatever there is.
Yes.
And they'll look back across a full 20-year period. And so people might think, well, that company doesn't exist anymore. And HMRC are quite willing to take a view of, okay, the company doesn't exist, but you benefited from these 15 companies. I mean, I've got a handful of examples of cases at the moment where actually not even foreign investigation services are taking a fairly robust view and saying, okay, that company doesn't exist, but we are still going after you for the money that you would have had out of it because we think it's funded your lifestyle.
Okay, thanks for that. Much appreciated.
No problem.
Excellent. Does anyone else have any questions? Right. I think I'll take that as a no. Excellent. So unless someone has any other questions, you've got our contact details here. we'll shortly end this session, and we would like to thank everyone for joining, for their time. And if there are any questions or anything even after this, please feel free to reach out to us.
Thank
Thank
you.
you.
Thank you, everybody.
Thanks for joining. Take care.